Hey there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly macro watch roundup in here, looking at the week commencing the 12th of October 2020. US relief package hopes see risk on phase resume. So we're going to kick off in here by looking at the macroeconomic and geopolitical developments over the past week. And really in here, one of the main things we've been focusing on is this US economic relief package, and still hopes that a new package will be approved in front of the election, before the election, despite Trump saying otherwise back on Tuesday. He backed off on that view, and Pelosi and Mnuchin are again talking in here. But the closer we get to the election, the more chances maybe that doesn't happen, but then there's still hopes of a strong package post-election. Trump also discharged himself from hospital early this week. Markets also took that generally as a risk-on event, a positive event, then avoiding any potential confusion or turmoil around the election, even though the next presidential debate in here has been cancelled in here. But Trump leaving hospital after an apparent positive recovery in here from COVID-19, also seen as a positive and risk-on event for the markets. Biden continues to push ahead in the polls, however, and this is being taken as the overall positive. A positive result, potential clean sweep in here of the Senate, the House of Representatives, and the presidency for the Democrats would be viewed definitely as a positive, as Biden continues to push his lead in the polls in here. Also less risk of an uneasy transfer of power if Biden has a strong victory. In Europe, we're seeing rising number of COVID-19 cases still on the up in here, and that's certainly very much seen as a negative in here. But at the moment, the market's kind of to some extent ignoring that. And we're getting further tighter European lockdown measures, both in Europe on a regional and national basis and in the UK. The UK-EU trade talks continue and coming up over the next week, and we are looking for some progress there. There seems to be some improvement in those talks, some green shoots in here and some accommodation from both sides, but we're going to have to wait and see. We do have a soft deadline from the UK on October the 15th for progress. We'll see what happens this week when we get to that. But it's also certainly helped in here, the pound pushing higher, slightly higher against the euro and significantly higher against the dollar. So let's take a look at the actual developments in a bit more detail in here across the global financial markets for the week ending the 9th of October. While the US and global equity markets pushing higher, the Dow Jones in here getting close to those September peaks in here on the Dow Jones. And for the Russell 2000, we're through the September peaks. So the mid and small cap indices in here doing well. The Russell 2000, the small cap index doing particularly well in here from late September through early October. That's showing breadth to the recovery in here, breadth to the stock market recovery, and that's certainly seen as a more sustainable rally and for the broader market. We've also got weakness in the US dollar again, the US dollar index falling notably in here over the past week, particularly on Friday, and that really a reflection of this whole risk-on theme. The US dollar very much seen as an ultimate safe haven right now. And then in turn, we're seeing here the US dollar not only lower, but also the risk currencies doing well. Particularly in here, the Canadian dollar, USD, CAD falling significantly over the past week. Strength in the Canadian dollar also being helped by the price of oil pushing higher, which we'll look at shortly. The pound also doing, we've already discussed this, the pound doing well against the dollar in here, breaking up above a key level at 130.07. That was that little swing high from the middle of September, and that sees a better outlook for the pound dollar. And the euro also trying to dismantle this head and shoulders top that we posted back in September, with a strong recovery effort through last week and a particularly aggressive advance on Friday. Turning to the commodity space in oil in here, oil has rebounded firmly over the past week, pushing back up to recent 1 to 2 month highs in here, and certainly potentially moving back to those August peaks as we move into October. Again, this is reflecting the risk-on theme from oil and also copper in here, plus the weakness in the dollar. Dollar weakness helping these commodity markets higher. Copper getting back close to that September peak, and remember that September peak is a multi-month peak. And gold, with the dollar weakness, popping back to the upside, taking out the early October high and trying to recoup those losses that we saw back in September. Let's now turn our attention to the week ahead, the week commencing the 12th of October 2020. So what do we have coming up? Well, normally we'd have our central bank watching here, but we really don't have much central bank activity. But earnings season does kick in earnest with the US banks. We have Citibank this week, JP Morgan, Bank of America, Wells Fargo, Goldman Sachs and Morgan Stanley all reporting earnings this week. And then also we have on the earnings season side, we have some of the major industrials in here. So we have Johnson & Johnson, Delta Airlines, going to be important to see how the airline stocks are doing. We have United Healthcare and also Walgreens all this week. On the macro data calendar, very, very quiet. Nothing of real note on Monday. Tuesday, we get Chinese trade data, the UK employment report, and then the German CPI and ZEW survey, and then US CPI during the US session. We follow that up with US PPI on Wednesday, the Australian employment report on Thursday, and then US jobless claims. And we finish off the week with US retail sales. I'm going to wish you all a great trading week. Please do stay safe out there, and I'll be back with you soon for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.